Welcome, everybody. We're very excited to see everyone, and we've got an incredible panel and event scheduled for today. Today is our Brandjectory Selling into Food Service 101 webinar. We've got a fantastic panel. As I said, I'm here. I am Michael Movitz, one of the co-founders of Brandjectory. I'm here with my partners, as always, Tom Malengo and Susan Bryanton. A couple of housekeeping notes. Our webinar today is going to be moderated by Tom, and we'll have Q&A at the end. And we also have a very special offer from Alohi Strategic Advisors that we will announce at the end as well. You'll definitely want to stick around. So if you have questions, please submit your questions through the Q&A function or the chat function, and we'll take them at the end. Everybody has been muted, and we're expecting a very large crowd, so we would like to just manage questions at the end through the chat. Very briefly, Brandjectory is a platform that helps to connect early stage CPG founders and CPG investors and founders to debt-based financing options. We are a fairly large community. We've got 140 founders on the platform, about 700 investors in our network. And our objective is to try to make those connections and build relationships, and also help founders learn how to build an investable CPG business and to navigate the capital raise process. We do it through an online platform and offline virtual meetings. Our pillars are network, content, resources, and process. And today's webinar is an example of one of the elements of content that we'd love to provide, bringing the best of the ecosystem to bear through our network and the expertise in that network. So without further ado, I'm going to hand it over to Tom to get started, and look forward to a great conversation.
Hi, everyone. It's great to be here. Thank you so much for attending. Thanks to our panelists up front and to Alohi for giving us some offers for everyone here on the call. We do have a lot to cover, so we're going to start very quickly with some introductions from our panelists so that we can keep the process going. I see Matt is off of mute, so I'm going to ask Matt to start, and then we'll have Jen and Wendy.
Thanks, Tom. Pleasure to meet everyone. My name is Matt Totten. I am the founder and CEO of Rooted Food Sales, and we are a brokerage focused on helping better for you and innovative brands grow in the food service channel. And I live north of Boston.
Jen, how about you?
Yes, sure, Tom. Good morning or good afternoon, everyone. My name is Jen Silvera. I am currently Vice President of Supply Chain for Cava, which is a fast casual Mediterranean concept. I've worked in food purchasing, supply chain for 25 years in both the food service as well as the manufacturing side in various companies in different formats. Nice to be here.
Thank you, Jen. Wendy, how about if you could introduce yourself very quickly? You're on mute.
Okay, thanks very much. Okay, thank you, Tom. I'm Wendy Cohen. I'm the leader of a specialized food service firm, WCSMS Food Service. We are a full service sales and marketing firm dedicated exclusively to the food service channel. We evolved from a full service national advertising agency specializing in food service, food and beverage, and we represent some exceptional emerging as well as more well-established food service brands.
Thank you, Wendy. So we're going to jump right in. We know this is a topic we get asked very often from brands that are on Brandjectory. Tell us more about food service. That's why we're here today. And we're going to start off. I'm going to ask Matt just to give us a start and really, share a little bit about the food service channels, the size of those channels, commercial, on-site, retail, and a little bit about, what those segments are, and then we'll continue on from that point. But Matt, maybe you could get us started a little bit on just the food service environment in general.
Yeah, so what is food service? So food service has many, many different channels. So in our world, our primary focus and probably where we focus is going to translate to most of you guys. So college and university, QSR/fast casual, so the Cavas and Sweet Greens of the world, corporate cafeterias, And then we have vending, convenience, we focus on it. It sometimes lumps into food service, sometimes not, and then travel as well. So those are the big 6 channels in our world. And then there are many, many sub channels. And this is going through different kinds of distributors. Although Unify and KE do some food service, but the traditional would be Cisco and US Foods and PFG for back of house, meaning bulk items delivered to a kitchen, and then front of house food service, which is mostly packaged goods and snacks are going through Vistar and Core-Mark's the world, and sometimes Unify. So that's the.
Wendy, anything you'd like to add to that?
Yeah, I just would like to expand a little bit on the opportunities for those who are a little less familiar with the food service sector. It's actually going to be a nearly $1 trillion marketplace this year. The sales in food service actually eclipse all of supermarket and grocery combined, and it's actually divided into 3 major areas. About 60% of the channel are the restaurants, both fast casual, both limited service and full service. About 14% is retail food service, encompassing C-store food service, club and other types of retail venues that have food service and prepared foods within their operations. And the other 27% encompasses all manner of on-site food service, like Matt was mentioning, college and universities, travel, hotels, airports, airlines, recreation, a number of different segments in that channel. It's really a very complex and diversified marketplace, and hopefully we can take some of the demystify some of the elements today.
Thank you. And Jen, I'm gonna call on you here. Maybe you can tell us a little bit about, those segments and who the buyers, the influencers, how you reach out to them, what a brand has to have in place to really start activating their action in these channels.
Sure. My experience is mainly on the restaurant side of it. So, haven't worked directly for college or university or, airports, but I can tell you, like, on the restaurant side, the larger the company becomes, the more layers there are, like everything. When companies are starting out, you typically want to get in front of the executive chef because they're the ones, making the decisions and sourcing out new items and ingredients. But again, as companies and chains get larger, usually not even super large, probably I'd say around 40 or 50 locations is when you start to see the different departments. And typically the supply chain team are the gatekeepers of new items, ingredients, et cetera. We tend to meet a lot more with potential sellers of new products, with brokers. We go to the shows and then we feed that to the chefs a lot of the time. So it's definitely good to get in if you can with the supply chain team.
Matt, is there anything you'd like to add to that?
Yeah, for sure. So titles kind of to look for as you're trying to get your product out there. Yes.
Yeah.
Okay. Yes. Lots of thoughts. So college university is a great channel to get started. And with that channel, it's almost the most interesting for different titles. So if you have a back of house item, so once again, back of house means a burger, an empanada, it's a kitchen item versus a packaged good, a chip, a kombucha, it's going to be a different kind of buyer. So if you are a back of house item, you got your empanada, you want to be looking to director of culinary, head of purchasing, executive chef. And if you have a packaged good, you want to be looking more director of retail. And then sometimes in college and university, the sneaky buyer across all channels is the dietitian. So that can be a good place to start. And then I would say with corporate and vending and C-store, it's more category managers. And Jen alluded to the restaurant scene.
Okay, thank you for that. And Wendy, could you I think this is a big one that that brands want to know about is really how do you really work with brokers and distributors, and what's the purpose of a trade show? What's the purpose of, are there sales cycles for food service? I think this is one maybe you and maybe Matt a little bit, because of the different product types, maybe should talk about just how do you deal with all that, and what's the right way for your brand to be your product and brand? What's the right channel and the right kind of broker distributor, whether it's valuable to go to trade shows, things like that.
Well, we find, frankly, that you're probably more likely to get distribution if you already have a base of business. Customers, the distributors, generally speaking, will want to have clients that they can serve. So most of the time, what we've been able to do as an organization is connect food service brands or brands that are interested in expanding into food service with the decision makers at the operational level. And once the operators are interested, we're able to more easily secure distribution. Now, of course, it's nice if you have distribution already in place, but like I said, we do find that initially when brands are first entering the channel, it's sometimes, it's a little bit of a chicken and egg sort of situation. Do you get a distributor first? Do you get a customer first? But we find it's usually easier to secure the business on the operator side before going to the distributor. And in terms of just what channels you should really reach, honestly, you're looking for product market fit. Where is your product going to be in the most demand within specific channels? Where does the customer base really match up to the primary target audience that you're serving? Does it fill a gap in the menu mix? Is it better, higher quality, or easier to prepare than another item? And certainly within the packaged goods area, that doesn't necessarily apply to preparation, but it certainly applies to how does it compare with the other items that are being offered, the assortment within that retail mix. So you just really need to do a lot of research, visit the venues, do online research, really determine which channels kind of align best with the brand that you have, rather than looking at just the highest volume sales. Like, for instance, maybe restaurants have a very high volume sales, but colleges and universities, like Matt mentioned, are an exceptional channel for many better for you brands because they're so plan forward. Gen Z is very conscious of higher quality and willing to pay more for the privilege. Even though CNU is only 3% of the entire food service operator spend, it's still a $9 billion marketplace. And I honestly would encourage very much any emerging better for your brands to look very seriously at CNU, college and university.
Yeah,
Thank you. And
that's
go
great,
ahead, Matt,
Wendy.
please.
Yeah, please, Wendy. I agree. So in the chicken or the egg game, this is so crucial. If you go right to the distributor, it does not matter how shiny, trendy, delicious your product is. The vast majority of the time do not care. You need to backdoor the distributor, and you need to find an operator who is large enough to force distribution. So the by the book minimum is 5 cases a week per SKU to force distribution. Of course, that's fringe, so more than that makes it easier. So you need to find an operator, and it's so important so you're not spinning your wheels, not to connect with Jane's single unit juice shop, but to go after Jane's 5-unit, 8-unit juice shop. So when they say yes, you can bring that interest to the distributor, and your volume will be there to force distribution. It's really, really important. I have a lot more to share on that, but Tom, I'll give it a moment to see where you want to go.
Yeah, Jen, you had mentioned, talking a little bit about the difference between the large chains and some of the broker distributors who can help smaller growing bands. Could you talk a little bit about that?
Sure. Yeah. I mean, kind of following up on what Matt said, like, especially a company, Kava size, or even, like 50, 100, we have a lot of power with our distributors to tell them what we're bringing in. So like he said, you don't go to them and say, oh, we want to get this in. If you have a product that works for us, then we will get it slotted. And I deal with 9 different DCs, but again, if it's an item that moves at least 5 cases a week, we can get it slotted into the various DCs. So you're definitely better off sometimes going that direction versus, going behind the scenes and trying to backdoor it in. And yeah. you know, it's all about the numbers.
So I'll throw a question out. Is there like Rooted, Matt? Are there other smaller distributors, sort of that are beneficial for brands to use at this stage, or are we really, is it really not available? Because is the Cisco's or the US Foods and such not really available to them?
Oh, they're available. Such fun topics. And first of all, I saw a question on there. It looked like it got answered to repeat the minimum. So it's the by the book minimum is 5 cases a week per SKU to force distribution. So yeah, no, Cisco, US Foods, PFG, GFS, the big ones are ideal, but it's yeah, it's ideal and it's totally available. You just need to find out who your operator wants to use. So to keep rolling with the Jane's Juice Shop, Jane's 8-unit juice shop wants your product. It's really important to ask who their distributor is. And often they'll just share their primary. So they'll just say Cisco or US Foods. I find this, our sales team, to find out who else they use, because they often in food service will use a secondary or third distributor. Jen, I'd be curious how many you guys use. So then if Cisco is given a tough time, then maybe you go to the regional player who may be easier and cite the pickup business. But yeah, no, Cisco and US Foods is great. So it's about finding the operator interest, finding out their 2 or 3 distributors they use, making them feel good that they don't have to worry about logistics, that you'll take care of it, and then bringing their interest to the distributor rep.
And this is a great lead. And I'm sorry, Wendy, I just
wanted to add that oftentimes if you get, for instance, a pretty sizable college and university program that does a high volume that wants to take your account in, but isn't necessarily enough to stock your item in the warehouse of the distributor. A lot of these distributors like Cisco and US Foods and PFG, the big 3, will do special orders. So the product can be direct shipped from the brand to the campus, but they can still order through the distributor. So you shouldn't be discouraged feeling like you can't work with a big college. We've had that situation occur many times. There are also a lot of specialty distributors, market by market, that are also available, like Tom mentioned, like Matt mentioned, secondary and tertiary distributors. And it really does depend a lot on, frankly, who the buyer wants to work with. We always, as an organization, do everything we can to introduce the brands to the distributors once the buyer expresses those preferences. And frankly, we usually know the preferences anyway, having worked with some of these entities for so long. But I have to say that you have to consider redistributors as well, like Dot Foods, which is an excellent partner and has been so helpful to so many of our clients, especially if you have a retail base of business. Sometimes you were able to give Dot a portion of that retail business when you're first building the channel, and they will work with you and take you in as a food service brand, even when you're just building from the ground up.
Fantastic. And Matt, I know you were just at the Dot Foods trade show.
Yeah. The Dot show is amazing. Dot's amazing, but from a logistical side, it makes things easier. From a sales perspective, which is my perspective, it just opens up so many doors. But you have to give, for emerging brands, it's tough. Like you need to be giving them Walmart, CVS, Walgreens, like big business to get their by the book minimum. I believe it's always changing. I think it's 250,000 pounds a year to be able to explore working with them. Yeah, and then Tom, I saw a question. Do we want to hold on questions, or?
If it's pertinent, please go ahead.
Cool. So I just saw the first couple sentences and it cut off, but it was like, what's the markup from food service distributors? It's going to be, I'm sure, the same as retail. UNFI, KeHE's, where the big boys, Whole Foods of the world are paying 8 to 10%, where street accounts are paying 30%. So like a 7,000, 10,000 person college, you could probably guess they'd be paying 15 to 20%. Joe's single unit pub, 30%. And then, you know, I don't want to use Kava as an
Mm.
example, a massive chain, you know, might be paying 7 to 8%. Jen, was I right? Just joking.
We actually pay a most large restaurant chains
Case.
pay a per case
Per
fee.
case. Yeah,
And
yeah,
it
yeah.
doesn't matter what the product is or what the pack size is. So that was one of the points, is that, you know, one of the questions is on sizing. And again, obviously depends on the product, but we always want to get the largest size we can that works for us through returns, because we save on the distribution fee that way. So, you know,
Yeah.
again, if it's a 40-pound case or a 10-pound case, we're paying a set price.
Yeah. And you know what's so interesting there is sometimes, right, in the situation for you guys, the bigger the case, the better, because they're paying X
Yeah.
amount per case. But then on the other end, the distributor is judging you per case. So if you're just trying to get into food service and trying to get to 5 cases a week, whether it's a 10-pound case or a 40-pound case, which is a little silly, you're going to be judged on, are you moving 5 cases a week? So easier to move 5 10-pound cases than 5 40-pound cases, obviously. So it's interesting. So
Yeah,
both are
it's just all based on scale. You know, typically for us,
totally.
5 is like, we're nowhere near 5.
Oh, yeah, yeah, yeah.
So, but I hear you. You're right. If you're trying to first break a new item in, then it can be a little bit
Mhm.
challenging. I guess. Yeah.
Yeah, I also wanted to mention too, because I'm not sure if this has come up yet, that in addition to the obviously the big three, like the US Foods and Cisco and PFG, within the back of the house items, you can also look, and you should be looking at specialty distributors like some of the snack and distributors like Vistar, and Cormark and E.B. Brown and a lot of regional distributors to SAS. If you're in the front of the house CPG space, because those have been excellent partners to our client Dots Pretzels and many others over the years. I mean, you really have to look very, very closely at the category, not necessarily only at the size of the distributor. You just have to look at what the best fit is for your brand.
You know, you've all kind of touched on this point, but could you talk a little bit about managing all the relationships in here? You know, I mean, with retail, you manage the buyer, you manage your distributor, you know, you work with a broker. Is it the same here, or is there you know, you mentioned operators and buyers, there's front of the house, back of the house. Are there certain techniques that people should use in managing the operators, the buyers, the distributors in this whole process? What's the best way to do all that?
So are you talking about specifically once you're in a distributor, how to
Yeah,
support that
to keep
partnership?
things flowing, to keep things
Yeah.
working, to make sure you keep on a good relationship. What are some of the things that may happen that you have to be on top of, you know,
Yeah.
all those kinds of things?
Mhm. So I find, right, so you're gonna be, in my opinion, you're gonna be going after the operator first. The operator interest is gonna decide what distributor you go into. Once you're in distribution, the game changes a little bit, right? So you want to get them set up with a program, so you're open coded. Which typically would be, it's a range, call it 3 to 8%, to be open coded with the distributor. It's kind of the cost of doing business. And then to support the distributor, I mean, it matters how regional you are and how much you want to roll up your sleeves. Like you can do district sales meetings, which have about 8 to 12 district reps, and each of them have like 30 accounts, and get them educated and excited about the product. What I like to do more, and in our world, we work more with the national account team. So every Cisco US house may have 4 to 15 national account reps, and they have the real juicy accounts, right? So they're dealing with the larger chains and the colleges and the hospitals. So yeah, I would try to work with the national account team, and then they have general sales meetings, which is like trade show style with all their sales reps. And then they have 1 to 2 trade shows a year, which are a must, especially the first year or two, and really expected to participate in.
Jen, anything you'd like to add to that?
Yeah, in my world, it's a little bit different. We would prefer, once you say your product was, you know, a great fit for Kava, and we said, okay, we want to bring in a packaged dessert. I'm just throwing that as an example. You would work directly with our category manager who owns desserts, and they own the entire relationship with the distributors. You will not be involved with that other than working through paperwork, setting up, you know, minimums and whatnot, but your relationship becomes with the brand. And, you know, you're going to want to have quarterly business reviews with that category manager, and hopefully, you know, eventually maybe the chef. And you want to check in and see how the products move, and you can get usage reports from the brand. But you really would not, we wouldn't care about open coding it. If anything, actually, we want it closed coded, because we'd want it to be specific for Kava. So it's, you know, definitely different if you're selling specifically to a certain brand versus if you're trying to get into a smaller, using a smaller brand that wants to do it open coded throughout the distribution system.
Such good points.
Yeah, something I also wanted to add here too, in terms of just managing the relationship, you really want to keep an eye on your sales projections and your inventory levels to make sure you've got the right inventory levels in all the warehouses that are going to be servicing the different customers. Because sometimes initially when you make different projections, you know, you're hoping to be as accurate as possible, but you know, don't want to disappoint the customer, and you want to make sure that they get their product timely. So we work very closely with the BDMs and the national account team, but particularly the BDMs and purchasing, to make sure that inventory levels are running low. We get those out, we get them to the right DCs, so that the whole system is working very smoothly, and all the products are being fulfilled. And something else I also wanted to mention that we haven't touched on yet, in terms of distributors. Most distributors also will charge you between 5 and 10% of a marketing and rebate fee. So you want to factor that in when you're calculating the cost of food service pricing.
Totally. Friendlier than retail.
Now, they will not
distributors.
charge you that for closed products for like a Kava. It's net pricing. So just know that when you're working directly with a brand, it's net pricing. We don't allow them to take rebates.
That's terrific.
This is so good. Yeah, and it's
Yeah.
true. And that's also good to know that when you go into a distributor, it's totally normal to exclude. Sometimes it's expected, right? Like Jen's talking about, to be excluded. But if you have a big Aramark or Sodexo contract, I don't even know if we want to go into that, but you can, when you're going into the distributor, you can just say all Aramark business is excluded. We're going to pay you 5% on street business. And they're like, yeah, and that's a normal flow of conversation and business.
Well, I'm going to throw out there. Oh, I'm sorry, Wendy, go ahead.
Oh, I'm sorry. I was just going to say it's definitely a much more complicated sell, or certainly just a longer process when you're selling into these larger food service contract managers, which frankly are really worth doing as you expand and grow the brands. But you know, the GPOs will also take, you know, anywhere between 5 and 15% of a marketing and rebate fee. You have to negotiate these contracts. They expect distribution to be in place already, so you really need to be a bit more established before you do it. And there's just a little longer process because there's a lot more levels of decision maker, which is why when you're prospecting on your own, it's really best if you approach independent self-operators and smaller and micro chains to kind of build up a base of business on a local basis, while you're also approaching, you know, nicer sized chains like Kava. Because it does take a little bit longer, and it does establish a base of business, which gives you a chance to do proof of concept.
So we're talking here a lot about sales and selling in. Could you talk a little, and whoever wants to jump on this one, what the sales, is there a sales cycle? Is there a review process? Is there a set schedule for these? Is there, you know, are there high points like before college starts, or, you know, things like that? So anyone who wants to jump in on that, please do.
Yes. I'm excited to answer all these. I don't want to keep jumping.
You start, then Jen will go, or something.
All right. I'll be brief. So every channel is different, and it matters if you're package versus back of house. So college, university, I just love college, university. It's a great segment. If you're a retail item, right, it's less time sensitive. And if you're a packaged item, especially if you're a newer item, like if you're going to be a new empanada on the menu, they're going to be figuring out their fall semester. Their fall semester is going to be set in the next few weeks. So you're going to be 2-3 months before the semester starts, and then all is good. And then you're looking at second semester, and you can really always outreach to colleges other than like a week or two before colleges start in a week or two into the semester. That's a more hectic time. And so I would know that with your outreach. Travel and bigger C-store do have review schedules, so I'd be aware of that. And then I'll let Jen speak on call.
Jen, you want to
the
jump
rest
in
of it.
there?
Yeah, I mean, it's definitely more fluid with food service for sure. There's, we're actually looking like 3 years out at this point of what our different projects are and, categories that we're focused on. But, that being said, like, another thing that I want to mention is, this might be a good time to bring it up, is that whenever you're thinking that, your product might be a good fit for a brand, you want to make sure you really, understand that brand. Like, go there and see what they have for space constraints. Scour their website. What is their purchasing or sourcing strategies? For example, at Cava, we follow the Whole Foods no list. So, if you have a product that has artificial ingredients in it, don't even bother like coming to us. So make sure you find that information out before you approach them. But someone mentioned, I think Peter, about a refrigerated aioli. I will tell you, one of the hot things in food service right now is called speed scratch. And, nobody has enough labor. We can't get talented labor. So concepts that had been making things in-house are now looking to outsource that. For example, we make all of our dressings from scratch at Cava. We're potentially looking at maybe starting to outsource some of that because we can't do it. We can't get the help. It's inconsistent. So don't be afraid of the refrigerated product because we have the volume to move it through the system. So that's an example of like, oh, wow, you have a clean item that you never know. It could get, you bring it to the buyer and I bring it to the chef, and it might be a 6 to 8 month process, but then, you're in there for several years. So there's not per se a certain timing on food service. It's all about what the item is and where it potentially may fit in.
Are trade shows important in this process?
Yes.
Yeah. Trade.
Oh, yeah.
Oh,
Well,
sorry.
I'm sorry. For my world, not so much, quite honestly. Like, the bigger you get, the less we rely on trade shows because, we know all the major players. There's, for key items, like commodity items, there's big brands that they're always going to be out there. But, I love working with brokers like Matt that know the industry really well. And, they trusted, like, he might call me and say, hey, Jen, I think this would be great for your brand. Can you meet with this person? We just don't tend to get a lot of value, quite honestly, out of the trade shows because there's so many, NRA, for example, it's just huge now. It's very, very hard to find anything new or different there or a source that's really going to work. So that's from me coming from the food service side. These guys will tell you something different, I'm sure.
Wendy?
Yes, we will.
Yeah, I think frankly, the trade shows are more valuable when you're looking at some of the non-commercial channels. Like the NACUF show is a very big show. It's a national conference every year that's very well attended for the college market. That's really, I think, a really critical show to be at. There's also a show called NACS, the National Association of Convenience Stores, has a show every year as well. So if you have any type of item for any of the convenience channels, and not necessarily just colleges and universities, but in hotels and in recreation and pretty much any place that you would be looking at vending or C-store applications, you would really be looking at that show. And like I think Matt may have mentioned this earlier, if you have a distributor, a lot of them have shows that are really very worthwhile going to, depending on where your distribution is. Certainly I think that would be what we would really want to look at the shows. Oh, and NRA is the national show for, the industry. And honestly, if you're an emerging brand, it's probably worth walking the show, just going there and looking around just to kind of see who your competitors are and kind of see what's new and what's happening in the industry, rather than the expense of taking a booth and really being one of tens of thousands of different exhibitors.
Yep. So I would recommend doing a show that makes sense in your channel. And I would also be prepared when you do that first show to be frustrated if you do not have distribution. But what else are you going to do? Because if you're selling not through a show, just outreaching to people, you're still going to be frustrated if you don't have distribution. Because I believe we're mostly talking to emerging brands here. So Matt, no matter what, the chicken or egg thing is hard and frustrating. And doing a show will make it easier. So you're going to be asked, are you in fiscal? Are you in US? And the answer very well may be no, but you have more opportunity to break through doing a show. We do a lot of shows in our Rooted world. So we do all the regional NACOFs, so we'll do the national NACOFs in July. We do NAMA is the big vending show if you're a packaged good and that makes sense for you. NAX is amazing. Yes, it's Slim Jims and Cheetos and energy drinks, but it also has better for you items. There's travel shows. There's so many NRA we just went to. If you have it in your budget, I would look into doing shows. You will have so many incredible, not all shows are created equal, but you will have so many incredible conversations, and I would recommend it. And you'll be frustrated, but no matter what, you're going to be frustrated breaking into food service.
Yeah, but what do you think about the fact that these guys have limited budgets initially, you know, in terms of just being able to, don't you think they have to be selective a bit in terms of which shows they go to?
For sure. Yeah, man. I mean, if you can't, you know, NACOFs is really reasonable.
They
You know,
is
if you need, you know, if you want a big fancy booth, that's one thing. But if you want to get a nicer 10 by 10, yeah, no, if you can't do it, you can't do it. And you can get scrappy without. I mean, you can just become a NACOFs member for $600, and that gives you access to their whole all the colleges that are part of it. And you can see the dietitian, the executive chef. You can search, manage, not manage. So just for $600. So there's scrappier ways to do it, but if you can afford it, I love shows and they're great.
I got one last big topic, okay, that we had talked about earlier, which is the whole go-to-market strategy. Okay, pricing, sizing, you know, the expectation of costs for doing business. We talked a little bit about that. I'll just throw that up. Let's make that a topic we discuss here. Just how do these brands really go to market? What should they expect from if you're front of office, front of store, back of store? You know, what should you be expecting in terms of the quantities they ask for? We talked a little bit about that, the sizing of packaging, convenience channel, you know, the college channel. What are some of the things that a brand may encounter when they say, I want to get in here, I want to do this, but maybe I don't have the right package or the right size or the right costing?
I mean, I think you need to look at the industry standard for your category, because a lot of times you have on some of the retail items, you want to have larger sizes for the back of the house in food service, and there are just different standards. Like, for instance, if you sell your product in retail in a 16-ounce bottle, and a lot of the operators at the back of the house or a lot of the chefs are using, you know, gallon sizes, or, you know, you really need to, I think, talk to some of the chefs and really do an examination of what your brand is what's standard for your particular category, but not necessarily only larger sizes. There's a lot of portion control that's very important to look at as well, because if you're looking at for takeout and delivery, a lot of times people are looking for single serve items. For instance, like if you have a sauce brand or something that's a condiment, and you would be able to have a single serve available. The takeout and delivery really spiked during the pandemic, and it's still going very strong. So in that case, if you happen to have one of those types of brands and you have a portion controlled item, you're going to generate a lot of interest, both from places like Kava and Jen's, you know, area, as well as from as well as other people that are still very big in takeout and delivery. And everybody was involved in takeout and delivery in the pandemic, even though it's shifting a bit, and a lot of people are returning to restaurants with dine-in. It's still definitely an area it's really going strong.
Jen, Matt, any more about going to market strategies?
Yeah, I mean, I'm sure Matt has a lot more advice for the various, various categories or channels. But, you know, again, for me, like Wendy said, it's not always necessarily about the size, but you know, if you have a great sauce that you sell retail, obviously I'm not going to be buying like 16-ounce containers for us to be using back of house. So you have to be prepared for that of being able to put it in a different pack size. You know, pricing, like I mentioned, we're going to want net pricing. You don't have to worry about, you know, paying the distributor fee or rebates or anything like that. It's really more about understanding distribution will be key, and getting it. And Matt, I don't know if you heard me, I said we actually have 10 different distributors we use at Kava right now, and you know, and that's going to grow obviously as we're growing. I mean, we have 263 locations right now. As we grow, that's going to expand because we're only in 20 states right now. So that's the tricky part. And, we could talk about Dot Foods forever, but I love Dot Foods personally as a food service size, because they allow us to bring items in that we wouldn't be able to necessarily move through some of the smaller emerging markets for Kava. And, and yes, it's hard to get in there, but at the same time, if it's a product that someone like a Kava is using, we can ask them to bring it in for us, and they will do that, because Dot's in almost every DC twice a week. They fill their trucks with various products. So it's a great way to get into a large chain, and where you aren't super sure of what the volume may be. So kind of all over the board there, but hopefully that answered it a little bit.
Something I also wanted to bring up, I'm sorry to interject, but Jen made me think of it. Even though you obviously want to be on the menu permanently and be able to reap those rewards day in, day out, a lot of times you are able to get an LTO, a limited time offer, test, or a test within just 1 or 2 locations. In fact, we worked with Kava, Jen's company, when we introduced Right Rice. And initially it was only tested in a few stores, and then it was rolled out to a larger number of regions. And now we're very, happy that it's on the menu in all of Kava system wide. So sometimes I think, you're able to, both with Kava and other restaurant chains and other different types of operators, get those types of tests where you have maybe just a limited time offer initially and a chance to prove yourself and see how popular an item is. So obviously the initial requirements for those types of tests, depending on how many stores are taking it in, would be less than it would be if you were going to be in all, couple of hundred stores.
Yeah,
Matt,
that's
anything
fine.
else?
We
Oh,
would
I'm
always
sorry.
test. We would always test something before we would roll it out system wide. So I should have said that. That's kind of, that's a given for sure.
Yeah,
Matt,
Kava's
anything else about growth
really
strategy?
wonderful like that. I mean, they really are, in terms of just being so open to really looking at quality brands and not necessarily just only the big names.
Yeah.
Matt, anything else on go-to-market strategies?
Yeah, a few things, and a couple questions that came in, I'll quickly touch upon, and one has to do with just go to market. So the question is, post, show, any strategy? So I would be prepared to make the operator be truthful, but make the operator feel comfortable, if you don't have distribution, that they don't have to, that you'll figure out logistics, right? If they have interest in their product and they're not a 1 unit, right? They're a decent size, that you work, you'll reach out to the Cisco rep and US Foods rep, to make sure if there's interest, that you'll take care of it and they won't have to worry about distribution. I think that's the most important thing. Potential follow-up. Tom, you asked about Dot. So I guess just so everyone knows, so Dot, think about it. So Dot warehouses your items and they're going to Cisco, US Foods, all of them, and smaller regional, call it, I don't even know the number, 4 to every day, 5 to 6 days a week. So if they could drop 1 case, right? If an account wants 1 case, no problem. Dot will be there with their truck. So they are a redistributor. And then I'm going to give a plug just because it's valuable here. We're hosting a Rooted roundtable, basically webinar with Dot Foods tomorrow. So you can connect with me on LinkedIn to find out that information if you want to find out more. That's the Dot guys on there. And then go to market strategy, I'd also say, so we used to pioneer brands and we've shifted away from that. I think it's really, so this might be a bit of a segue, but important of when it makes sense to connect with a broker. I believe that you should do it yourself early on. Gain that first distributor or 2. I just think it's important. And I think you're going to be disappointed by the actual time it takes if you bring on a broker, even if you pay them a retainer. So I would really recommend identifying the key channel or 2 that makes sense. Pick an attribute or 2, local, plant-based, gluten-free, whatever it may be, minority, women-owned, and trying to start off in your region and just go after some key operators who can force distribution. I think that, and then, I'll pause for there.
There was an interesting question here just about the parallels between grocery and the channels for food service. How does if a brand's already successful in retail, how should they try crossing over into food service? Is there a specific strategy or some things you want to make sure they would think about if they've already had some success in getting on the retail shelf?
Identify the channels that are best for you and for your brand. Like we said earlier, there's so many different opportunities in different areas. If you have, you know, certain types of artisan products, they might fit very well in fine dining, which frankly, even though it's a small percentage of the market, they have the highest average operator spend of nearly any subsegment in the category, over $400,000 average spend per individual unit. And you look at fast casuals, they're probably somewhere in the $200,000 range. So even though there are less fine dining units, if you have the type of product that fits there are obviously a lot of excellent opportunities. You really just need to look at product market fit and what types of what types of channels are best for you. I think, more than anything else, and really make sure you're well aligned.
And I'm going to do a shout out right here to Stephanie Lynn from Aloha, who's been answering some questions in the chat for folks. But there is one in here, there were a couple in here that Stephanie, thank you for so much for answering. We'll have you on in just a few minutes for your giveaway. But really talk so make sure everyone sees these. A little bit about the requirements for hospitals, schools, K through 12. Certain limitations, products that won't be accepted. High sugar, low sugar, all that. If you could just maybe address that for a moment, I think that's an important one for folks to know.
Well, people are always looking for better for you alternatives, but K through 12 does have a lot of very specific mandates in terms of some of these, ingredients, and definitely if you have, an item that doesn't have added sugar or is very low sugar, you're going to get a much better reception than you're going to get with an item that doesn't have that clean label profile.
Yeah, I'd say K through 12 and in person or hospital, inpatient hospital feeding, which are not channels we focus on at Rooted, they have requirements. Outside of that, each chain, like Jen says, they have to follow the Whole Foods list, like certain attributes and ingredients might be better or worse, but no, it's not as regulated. In food service, you would want to share if it's plant-based or clean label or allergen friendly, you'd want to share about that. But yeah, K through 12 and some of the hospital sector is way more regulated. And I would say, if you're doing well in grocery, just to validate and create excitement, if you're already in food service, you're reaching out to Cornell and you're in Princeton and UMass, you would name drop those so they don't think they're the first and it's already going well. If you don't have food service accounts, I still think you can mention a grocery store or two where you're doing well, and it would add legitimacy if that's what you can share as far as your wins.
So Matt, one of the questions that I think maybe a little bit more, I'm not sure, did we elaborate enough on the difference between Dot Foods and some of the traditional food service distributors?
I think so, but maybe I left. So Cisco, US Foods, they will slot their depends on the distributor, 40 to 70 across the country. And Cisco will slot your item if you're doing 5 cases a week per week, and they distribute regionally and nationally to their accounts. Dot is a redistributor, so they don't distribute to the customer. They don't, so maybe in rare cases, they don't go to Cornell. They will bring in your product and drop it to redistribute it to Cisco, to Baldor, to Cormark, who will then deliver it. So the key thing is understanding what a redistributor is. And you asked about in the chat, Tom, you asked about broker advisor out of the gate. Yeah, you need clarity. I just I felt differently a year or two ago as I was growing Rooted. Yeah, I think most brokers are not going to take you on unless you have distribution, and they may take you on with a retainer without distribution, but you have to really understand that has to be patience. And I feel that brands should gain that first distributor to roll up their sleeves and do that early selling by themselves. And then once they have some distribution, then some business, then find a broker. That's just how I feel, and I very well may be wrong.
Well, everybody's got their own opinion about that. And honestly, I think you do have to have some resources available to be able to take on a broker, a good broker, or a good sales organization like ours. However, I want to make sure that I also say that we were always open to having conversations with quality brands that are looking to enter food service, to give them a professional opinion and to talk to them about their vision, even early on, to just give them some tips. So I'm happy to be open for that, to have those dialogues and those conversations, because we've worked with some clients, frankly, that even have had no distribution in food service or retail, that were just looking to enter the channel and had some resources available to enter food service, that had some commitment to do that. So and not only that, like I say, I think it's just really nice to be able to give back and to be able to really help brands kind of point them in the right direction and help them navigate some of these issues. So certainly happy to to talk with people who are looking for that type of feedback as well. And just one more thing I'd like to say about Dot Foods. I'm not sure if it's come up because people may not really be familiar with all the ins and outs here. Most of these big food service distributors like Cisco, PFG, they have minimum quantities. They want, the pallets of product to go into their warehouses. Dot will actually warehouse and ship less than a truckload orders out to these individual other distributors and customers. So you're able to work with a much broader base of customers that can't necessarily afford to buy a whole pallet of product, but is still an excellent account. So that's really one of the big benefits of Dot. They're less than a truckload ability to be able to really help manage smaller orders.
Yeah. And then, Tom, may I just final statement, I believe, for me. Yeah, so where I think about retail, which has its own challenges and skill set to gain traction, retail is more in the box. Like, you really need to know the review schedules, and it's more like spreadsheety selling. Food service is more roll up your sleeves, get scrappy, get gritty, because you can email. It's going to be a sales process, but you could email Pete's Coffee and they could be interested in that item, and you could get an email back today in a meeting next week. If you roll up your sleeves and get after it in food service, you can create traction out of the gate with some grit and some hustle.
One
Definitely
question here
true.
before we
I'm
go
sorry.
off, before we finish up here, one question I thought was interesting here was, is there a way of getting comp information, volume information for comp pricing and the volume information for the different types of segments and distributors? Is there a place to get that? How do you get that? One last question here before we
mean,
finish.
you could go to like, so if we're trying to figure out that in our world, we'll call a distributor rep buddy and have them look it up on the computer. But then you're seeing it like after some up charges. So you have to take your best guess on what the pricing is for a comp item. You could go to like Webstron or and get like a decent idea. But that's, I Wendy, do you?
Yeah, I mean, food service direct is like restaurant like you said, webstaurant.com. Yeah, you can look at the prices they're charging there. But honestly, it's so different depending on the category you're in, and there's so many factors affecting it, because different accounts get different contract pricing in these distributors as well. So it's just something that you can't. It's just very hard to generalize.
And I'd say as well, I think this is important. I'm going to sales pitch for not for Rooted, but for food service right now, is where retail's amazing for many, many reasons, but where I hear so many horror stories about working with the distributors and the operators and the cost of doing business. Food service is this cleaner, more transparent, healthy, fruitful business. It has its own challenges, but it can be an amazing avenue and channel for brands to grow up. You can make money off your first case, in food. Slotting fees and stuff are really not part of the channel.
Yeah,
Jen,
that's really important to mention, that you don't have to pay those slotting fees. It's just not a factor at all. Plus, people need to consider that more than 50% of all food and beverage dollars are spent in food away from home. So by not tapping into food service, you're really neglecting half the market.
Jen, any final comments from you?
I just agree with Matt, like you can be scrappy and gritty and, yeah, it's hard to find the right person, but if you do, your product could be that one special product that, that makes sense. So like I said, my best advice is just know the brand though that you're going after. If you know what I'm looking for and, you go into a Cava and you see, you know what? I see that their desserts are barely moving. You see some hints I'm dropping here. Then you know what? Do I fit their sourcing strategy? Do I have clean label? Then let me figure out a way to, search the website, contact us. And if you get in front of the right person, it just takes one call and you could be get in tests. So good luck.
Thank you, everybody. Thank you, Wendy. Thank you, Jen. Thank you, Matt. I think we probably need to do a food session 2 here shortly. So we'll put that on our list because this has been really insightful. And now I want to just turn it over to Stephanie Lynn from Alohi. I'd like her to introduce herself. And I know she has an offer for access to some material for people on the call. So Stephanie, thank you for being here. And I turn it over to you for a few minutes.
Yeah, so I'm Stephanie Lind. I spent 23 years working for big companies across food service distribution, ingredients. I actually started in retail, so I have a kind of a broad channel perspective. I actually run a consulting group that helps brands, generally either doing the Series A, Series B, or with a significant retail business. And what Matt said was true. It is really difficult to pioneer a brand, and frankly, the broker business isn't set up the way that it's structured financially to do that. It's just not fair to them, usually given the expectations. We created Alohi, a training program, Food Service 101. So I heard a lot of great information today. I know for anybody on here who doesn't know food service, it probably felt like word salad. And that's the biggest challenge that I think brands have coming into food service, is just understanding the language and how it all fits together. So we actually have about 7 or 8 modules. It'll take you 90 minutes to 2 hours to complete. They're short modules. There's quizzes at the end. It's everything soup to nuts food service, operators and distributors, commercial, non-commercial, GPOs, contract management, chain accounts. I think it's about a $500 class. We're going to do a 35% off for anyone that goes. Link is in the comments. And if you just type in for the discount code Brandjectory, then you'll get in, and we have some additional webinars in there as well. But at the end of the day, we just really want to make sure that if you're going to go into the channel, that you have an opportunity to understand what the channel looks like, so that as you are out knocking on a door for somebody like a Jen, I mean, what a great opportunity to talk to Cava, but make sure you understand how to talk to that operator, how distribution is going to impact how they make their decisions. We really want you to be prepared as much as you can before you get on that ride. So I appreciate, thanks Matt for letting me crash your panel.
Please.
Here, but
Team food service.
So much fun. But
Thank you, Stephanie. And Wendy, Jen, Matt, thank you. Thanks for being here. We have this recorded. We'll put it out to everybody who signed up for the event. This is part of what we try to do at Brandjectory, is deliver. It's more than just about finding that right investor or finding that right financing. We want to make sure that brands are growing as strong as they can. And we want to try to provide as much information about all kinds of topics that really affect how you grow as a business, and that you find success, whether it be through financing, capital infusion, or just scrapping it out and doing it big. So Wendy, Jen, Matt, thank you. Thank you, Stephanie. For Michael and my lovely wife, Susan, we thank you very much for being here. And we look forward to seeing you next month. And we'll be doing a webinar on the psychology of marketing, really how to get into the consumer psyche. So we'll have an expert of that, Jorge Meza, will be presenting that later in July. So look for that. And if you want to know anything about Brandjectory, reach out to Michael at Brandjectory, Tom at Brandjectory. We will get back to you immediately with more information. We thank you all for being here, and to the folks I know, thank you for joining us.
Thank you, Tom.
Thanks. Bye.
Bye-bye. Thank you, everybody.